Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Thursday, January the 14th. The year's 2021. Let's talk trading. What to do after you make a mistake with Walmal, part 3. And let's not make the mistake thinking that these videos are not for educational purposes only, because these videos are for educational purposes only. Your results may differ from mine and different from Walmal's. Walmal, we got a reply from the Mighty One. Shout out to Mighty One. And he said, I don't believe in mistakes. I just think, what do I have and what can I do with what I have? It is more important to answer what could I have done than what should I have done. The former is related to making more money, and the latter is pure fantasy. You had an interesting retort to that.
I don't remember exactly what I said, but I said something, coulda, shoulda, and it's interesting when you look at coulda, shoulda.
Well, you said something looked at the future and something looked at the past, or
exactly, yeah. What coulda is when you're, it's sort of like coulda kind of looks into the future. And the idea is that, okay, I could have done this and I would have done that into the future. Shoulda is sort of like, oh man, I should have done that, and so one has got but I agree with him in one respect, and that is that, you got to look at the positive of things, and I think what the coulda kind of looks at the negative, and the shoulda sort of, or I'm sorry, the other way around. The coulda looks at the positive of things, and shoulda kind of looks at the negative of things. Because when you go and just harp on the shoulda, the problem is then you can go and get into all sorts of type of psychology problems. You put yourself down. You start, losing your confidence, losing your trust in your method. So the shoulda can get you into trouble. The coulda, on the other hand, what's nice about that is that, I could have done this and I could have made X, Y, and Z, and it goes like, okay, the coulda, that's what I'm going to do the next time. So it's going to be a nexter, I guess. I don't know, but I could have done this and then take that into the future and then do that. Shoulda, on the other hand, it goes and just harps on the negative too much. But here's a reality: how do we learn? We don't learn by just, things happen to us, or do you learn more from your mistakes, or do you learn more from your wins? More than likely, if you're like most people, you learn more from your mistakes. So you do need to go back and look at your history. You got to look at your history. You got to look at the market history. You got to look at all those different things, and that will give you it'll give you a good base to say, hey, you know what? This is what's happening. It's sort of like yesterday with yesterday's trading, and I talked about that where I got in and, I probably got into the first trade a little bit too early. That was a mistake. I got into the second trade and I got in probably again a little bit too early. Then on top of that, compounded both those mistakes because I did get into profit on one of them and I could have taken some pips off the table. The other one, what happened was I got back up to break even and I, here's that word, should have just gotten out, okay? And no, and I didn't. But the coulda on that would have been, hey, I could have gotten out of that, and it would have freed me up. I wouldn't have taken that loss, and I would have been in good position to go in the other direction and make a ton of pips. That's what I got to take away from the table. I look at the couldas, but I also have to go and look at the shouldas, because if I don't look at the shouldas, I'm not going to learn from the history. It's sort of like that old expression. If you don't learn from your history, you're doomed to make the same mistakes over and over again. And that's the reality. So we have to look at both.
Yeah. Okay. So yeah, I definitely think that the shoulda, coulda, woulda. In fact, I wrote a blues song about that. Maybe I'll post the link and you guys can say, good thing you need to keep your day job, because but the thing about it is, see, shoulda means, okay, let me write this down, put this in my plan or something, or let me read this every day so I'll burn that in my brain, as opposed to, I would have is one of those things where you go, well, why didn't you if you would have? So that's just talk. And then the could have is definitely a positive where you're thinking, okay, I could have done this. So maybe when the opportunity presents itself again, I will take action. So, boys and girls and fellow non-binary traders out there, I wrote a new little template here. I call it Look Left. And what I've done is I've used the TRO HL5 indicator. And here, all I'm showing are the closes. Okay. And what I'm doing then is I'm coming down here. I'm showing the 1 hour closes. I'm using 48 bars, which is basically 2 days worth of closes. And I'm shifting just 1 bar so I don't paint the current bar. It's just the previous bars. And so what does that do? It puts a bunch of these horizontal lines at the 1 hour closes. And we also have our friend, the 3-level ZZ indicator here that I modified. And this is the latest version of it. And so all I did here was I say show TR homage true, show trade lines true. And what that does is and I set it just to show 1 trade line. So here at the last 1 ball, it'll put a horizontal line right here at the close. And you can see here, since we had a 3 ball, there's a horizontal line right here at the close. It's red. It's right here stepping over that close line. And what you can see is, as Mighty One would say, price either closes above a line or it doesn't, or it either closes below a line or it doesn't. So right here, back in the past, you can see a 3 ball was put in right here. Well, it closed below this line. This one closed above it. This one closed above it. That was an indication to go north. And then right here, you see all these wicks? Price kept closing above this line right here from 1 hour ago. And then look what happened. Price launched. Now, it's funny because Walmal and I, we were both long here, and actually we were stuck in a trade. Just for some full disclosure, we were long right around 30 at the Walmal line, and we took that trade earlier in the hour, and you can see how it kind of went against us for a few pips. But then it cleared, and we punched out with just a handful of pips, and we left a bucket load. But if you notice, price came through here and just punched right through. I'm using M5 charts as opposed to M1 at the moment. And then you can see here, this 1 ball, this became a 1 ball right here. Then I think it became a 2 ball somewhere. And as you can see here, it just cleared these open spaces. And then it got here, struggled, fell back below, closed below. This would have been a great take profit. And the reason being, if you look here, you had this big bar drop right through the line. So price pretty much came back and cleared that out or zeroed that out. And that would have been a nice place to take profit. Or you could have just waited and say, wait a minute, let's just see what it does. It'll either come back here and you could have still taken profit. Or let's just see if it moves up. We had a higher low, higher high, higher high. I think that was a higher low by a bit, but you can see close above previous high, close above previous high, right here, close below previous high. It had put in a 3 ball, cross below the line. So somewhere in here, there would have been a nice place to take profit. And it's just one of those things where, you can use very simple tools. Now, you're probably wondering what this is right here. And this is a new toy. I call it the TRO bias price action. Okay, the H1 candle color is green at the moment. You can see that over here too. 3-level ZZ. From the most frequent one, it's saying we want to go short. The open is above the previous middle. The close right now is above the previous middle. Okay, it just went below the previous middle. Okay, the candle, the close is below the previous close. The close is below the previous high. The close is above the previous low, and we're not in a rat zone. down here we were in a rat zone, so this was pointing up green. And so we had a bunch of, it was pretty much green across here, and we just followed, you could just follow that. So, you know, that's just another way of looking left and, you know, using the tools that you have at your disposal. What do you say, Walmal?
No, I think that that's exactly right. Just to use that just as it's not a method for entry, that's for sure. But what it is it gives you an indication of what's going on with price. Now, the argument always is, well, you can just look at the chart and see what price is doing. Yep, that's true. But it's nice to go and see and get that reference of what is price doing based on things that have happened in the past. Again, learning from your history. So I can go and look at those. I can just look at those arrows and say, hey, I know what it's doing. I know what it's doing based on what it did in the past. It's easy for me to spot, and that's part of that's the whole point of indicators. I know we've talked about indicators in the past. And what is the point of having an indicator on your chart? Okay, the indicator doesn't tell you to take a trade. The indicator doesn't tell you to get out of the trade. The indicator just helps you recognize what's going on, and for me anyway, the biggest part of trading or successful trading is pattern recognition, recognizing what's going on, right now in the market, and then based on history of what it's done in the past and putting some statistics behind it, I'm able to go and make a good judgment and take the risk, because no matter what you do, you're taking a risk, but take the risk to take the trade to go and see if I can go and get some money on this deal.
Yeah, and once again, we can keep it simple, and we just, could go back to the sweet spots indicator here and just taking that long at 30, and you see here it was like it never, you never got a short trigger, but you had a long trigger. Once again, we took it the first time, and it put us in a little drawdown, but you can see we never, it never threatened a short signal per se. It got into the previous H1 candle's wick zone here, and then it came back out.
Yeah. If you were to follow the actual rules that are posted, for the Walmal trade, I mean, this is a perfect Walmal trade because, you would have gotten in. Technically, you shouldn't have gotten in until the second time that it crossed it, which means that on my chart anyway, you would have gotten in at 16 minutes after the beginning of the hour, and then you would have taken a drawdown. You would have gone down. You would have been short. You would have been down 5.5 pips. Okay, that's within the rules. You're still in the trade. It never went above the line. So my 3-3 rule never kicked in, and so you're still in the trade. Then it would have come right back up. Would have hit that line. It would have ignited through that line. Would have immediately gone all the way up. You would have at plus 5. You would have moved your stop loss to plus 1, wouldn't have taken you out. Then at plus 10, you would have gone and moved your stop loss to 5. It never would have taken you out. Then at 15, you would have moved your stop loss to 10, and it would have taken you out. No, it wouldn't have taken you out.
Yeah, so on this chart, it would have.
Okay, on my chart, it wouldn't have taken you out, and so you would have then gone all the way up to 18 and 19, and then it would have taken you all the way down to 14 or 15. Then at that point, it would have taken you out at 15 pips. That would have been a beautiful trade. So, indicators are great, and I use them. I love them because it makes it easier for me. But at the same time, just putting a horizontal line on the chart, it'll work too. It's just, I think sometimes it's easy to have the indicators because, they're there just to go and give you information. The danger of indicators, of course, is what? You can go and become reliant upon them. You don't ever want to be reliant upon something. You just want to go and trade what the market's doing. And if you got statistics telling you that, that this trade works, more times than it don't, that's what you do, and that's sort of like, that's why I put that, I changed the rules and made that rule change where I wait for the second entry, and the reason why is because I found more times than not, I would not be able to go and get a successful trade on it.
And once again, so fellow traders, the fastest 15 minutes in trading is just about up. So hopefully you will learn from your mistakes and you will write down what you could have done, should have done, or would have done and make that part of your plan, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.